Hi, this video is for attorneys, either divorce attorneys, real estate attorneys, or financial planners that need to know how to slash real estate financing costs for their clients. I'll give you the purpose, process, and payoff for this video. The purpose is that really you're getting a free gift of knowledge so that you can benefit your client and maybe even pay for your services or a large portion of your services when you see the mathematical examples. But that's what I'm going to do. The process is to give you an example that you can apply to your clients. And then if you want them to have that information, there's contact information somewhere below. You can click on that or go to our website and get more information or ask questions. And there's also a free report. Don't miss the free report. The number one mortgage mistake that people make is a video you can download on the site. And the payoff is essentially that you're going to get more referrals as a professional. You're going to make more money because your clients are going to get a superior outcome having this knowledge, and you're going to, of course, get an edge over your competition. And man, you know, it's really the professional, ethical, right thing to do to get your clients a superior outcome. So here goes the mathematical example, and then I'll give you actually two different examples. One is an example of where there's timing involved, where there's going to be a period of time before someone has to sell or refinance their home. You know, maybe they could be building a home, or maybe they know they have to move in a certain period of time, or they have to refinance in a certain period of time. But during that period of time is where they can capture huge savings. And the second example I'm going to give you is, let's just say they just have to go out and refinance a house for whatever reason, and they're going to be facing, you know, the marketplace. And this is how you can slash those real estate financing costs because they've got to go out and they've got to compare, or they should go out and compare and shop. And this is where it's going to be tremendously beneficial in either example. So $300,000 mortgage. Let's just say that here's a real life example of $300,000 mortgage. And let's say someone has, you know, whatever rate it is. You could use an example of 4.875 on a 30-year fixed, but they know they're going to be moving in 6 to 12 months. Let's say 12 months. So if you know you're going to be moving, or you know you're going to have to refinance, why would you sit there and continue to pay the highest possible rate, which is a 30-year fixed? When you could drop down, in this example, let's just round it off to 5%. You could drop down to 1.99% on a 1-year ARM. So while you know you're sitting there waiting, you're basically rounding things off 3%. You're saving 3% over this 1-year period because you're going from 5% to 2%. Okay, so and let's do the math. 300,000 times 3% is $9,000. They could be saving $9,000 over this 12-month period. Again, it's only a 6-month period. Well, they're still saving $4,500. Now, I know what you're thinking. You're thinking, well, yeah, but those closing costs are really going to gouge them. They're going to be $2,000 or $3,000. Well, what if I told you, for a fact, in Fort Wayne, Indiana, bank closing costs, if it were only $149 plus recording fee. So let me repeat that. Let's say it's $200, not $2,000, not $3,000, $200 for bank closing costs. And yes, it includes all the things you would expect it to include. Appraisal, credit report, flood cert, title work. It's all in there, okay? So this is what's the stunning part is that people just don't get it because they're so used to having that $2,000 or $3,000 closing cost. They just don't get it that it does exist to have a low closing cost and great rate provider that can provide the exact same conventional loan services and the exact same service level. They just do it cheaper. Just like any other business, there's low closing cost providers out there, or low cost providers out there in all kinds of businesses. So there's your one example of if it has to be done in a certain period of time, that's that quick $9,000 savings, and it only costs a couple $100 to do it. Now the other example would be, let's just say they have to go out in the marketplace and they have to refinance for whatever reason. And so in this example, what we're going to give you the example of is if the people find the great rates, low closing cost provider, here's an example of mathematically $300,000 mortgage. Let's say they could save a half a percentage point, 0.5%. Okay, that would be 0.5% times 300,000 is $1,500 annually. So if they didn't shop around and just went to the first provider, the one that has Super Bowl commercials and spends a huge amount of money in marketing, well, it's very, very common that it could be half a point, could be a quarter point. But in my example, that $1,500, if they're going to be in the house for the next 20 years, well, there's $30,000 right there that they're unnecessarily paying. And again, I already gave you the example. You already know they're still also going to save the $2,000 to $3,000 in closing costs. So the other example, and again, if that's too high, let's cut that in half. Let's say it's $150,000 mortgage. Well, okay, in my same example, over that period of time, it's going to be $15,000 they saved over that period of time, or $750 annually they're going to save, plus the 2,000 or 3,000. So I hope you can understand mathematically from these examples that if you can help your clients out and get this knowledge, get this savings. Some of them, let's face it, they're already financially wanting to be getting the best possible deal, and if you can help provide it to them, then you're going to be miles ahead. So that's all I've got right now. Again, my contact information will be somewhere below, and you can check out the site and ask questions or watch some other videos. But this video has ended, so go forth and help people save money on their mortgage. Thank you.